Very good morning, everyone. How are you all? Everyone fine? Now, last class we were doing AS 15. 1 5. We have not yet completed that. Have you done revision for that topic? Okay. First, let us have a revision. See what we have done till now in that chapter. Okay. But before that, any doubt in any previous chapter? Your next test will be on all accounting standard of volume 3. All accounting standard of volume 3 except consolidation chapter. Chalega? Whatever we have done till now. Correct? Now AS 15, we have understood that this standard is applicable for all employee benefit except employee share based payment. That is not covered in this accounting standard. Employee benefit, we have understood that it means all form of consideration which is payable by entity to its employee for the services rendered by employee during that particular year. It may be arising out of formal practice or informal practice or any legislative requirement. Correct? Now, in this chapter, employee will include all types of employee, whether it is skilled, semi-skilled, unskilled, part-time, full-time director, any manager. Correct? Now, this will also include any benefit which has been provided to the spouse of employee or children of employee or any dependent of employee. Then for accounting purpose, entire employee benefit was divided into 4 parts: short-term employment benefit, long-term employment benefit, post-employment benefit and termination benefit. We have done short-term employment benefit. So any employee benefit which are payable within 12 months from the end of reporting period, that will be short-term employment benefit. It will include wages, salaries, profit sharing bonus, short-term compensated absences or any other short-term employment benefit. Accounting treatment is very simple. It will be recognized as an expense and liability when the services are rendered at an undiscounted amount. Normally, short-term employment benefit will be recognized as an expense unless it is included in the cost price of asset as per respective accounting standard. Then we have done one special point about accounting treatment of short-term compensated absences. So if that absences are availed during the year, then no treatment. If not availed and which are non-accumulating, no treatment. Accumulating can be of two types. One is vested, one other is unvested. Vested means cash against leave, unvested means leave against leave. Whenever vested, the full amount of expected cost of leave will be recognized as a liability or provision. Provisions are also liabilities. And when I am saying unvested, the proportionate amount of the provisions should be created for the expected cost of leave. So when I am saying full amount, it means what? Number of unavailed leave multiplied by salary per working day. When I am saying proportionate amount means what? Number of unavailed leave multiplied by probability of availment. That will be given in the question. If not given, the question will assume probability is 100% and then multiplied by salary per working day. However, no good question of this nature has been given in ICAI study matter yet. I think only one question we have done, that was simple only. Then we came to post-employment benefit. So post-employment benefit are those employment benefits that are payable after the retirement of the employee, means after completion of employment. For accounting purpose, there are two types of post-employment benefit. One is defined contribution plan, other is defined benefit plan. So under defined contribution plan, a fixed amount will be contributed by entity to a separate entity known as plan asset. Remember, fixed amount will be contributed, and once the amount is contributed, entity has no further obligation to contribute any other amount even if the plan asset is not able to fulfill their obligation. Means if the plan asset is not able to pay to the employee. Means can I say whatever amount contributed by employer that will be recognized as an expense and liability when they are liable to contribute, when they are liable to contribute. If such amount is payable after 12 months from the reporting date, that will be recognized at a discounted amount. Normally it is payable within 12 months, therefore we use this undiscounted amount. Correct. Then we started defined benefit plan. So under defined benefit plan, if you remember, I have taken one example of gratuity, and we discussed that under this benefit is defined, but the amount of contribution, the amount whatever is payable, that is not defined. Correct, that is not defined. So it means we need to estimate that amount, which is based on a lot of uncertainties. Therefore we require help of some expert. That expert will be known as actuary. Now actuary will estimate the amount and we need to do accounting treatment for that. Understood? Now the actuary estimation is based on some assumption. There are two type of such assumption. One is known as demographic assumption, one is known as financial assumption. Okay, these all are important for MCQs. Got this point? However, we have understood that to recognize current service cost and present value of DBO, we will use which method? Projected credit method. I was saying production method. Projected unit credit method, PUCM. We'll use PUCM. In that case, what we'll do? Whatever projected benefit that will be allocated to the number of years, we first calculated projected benefit, remember? That might be given in the question also, or we need to calculate it based on the last drawn salary, if you remember. Then we divide by number of years, we get allocated benefit. Then we'll apply discount factor, we'll find out current service cost. But in this, we remember current service cost, discounting factor. To calculate current service cost, discounting factor will calculate from last to first. Means last year will be 1. Then understood now? So here you can do mistake. Be careful. Be careful. Once you calculate current service cost, then we'll prepare one liability statement. Liability statement means opening balance plus interest plus current service cost, closing balance. So that closing balance is known as closing balance of present value of DBO. Interest cost you have understood. So current service cost, what is journal entry? Current service cost to present value of DBO. Current service cost will be charged to PL. Then interest cost, what is journal entry? Interest cost to present value of DBO. Then interest cost will be charged to PL. Then we have done one more point, actuarial gain or loss. Whenever there are some changes in present value of DBO due to experience adjustment, means experience adjustment means actual is different from estimated. So of course actual will be different from estimated, or due to changes in actuarial assumption. Whenever there is some changes in actuarial assumption, so whatever you have calculated last year, that will change. So that is known as actuarial gain or loss. So if increase in liability, it is known as what? Actuarial loss. If decrease in liability, then actuarial gain. So what will journal entry for actuarial loss? Actuarial loss to present value of DBO. What is the journal entry for actuarial gain? Present value of DBO to actuarial gain. This actuarial gain or loss will be also transferred to PL immediately. Understood? This much we have done. If you have understood this much, so I need to explain you some other point. Now just try to understand, everyone. Now we have understood that current service cost. Now in this also there are two party, entity and employer. Entity and employee. Correct. Now suppose there is a current service cost. Let us assume for simplicity 1 lakh is the current service cost of every year. For simplicity I am assuming 1 lakh is the current service cost of every year. Now you know current service cost. It means, can I say this much amount will be payable after retirement, and can I say after retirement a huge amount will be payable because it will include interest cost, and every year we need to compute it, and will depend upon total number of employees. Just try to understand, suppose we started a new company today, and with all young people, you all join together. Suppose you all become the employee of that company, we will pay you, don't worry. ठीक है ना. You all become the employee. As a chartered accountant, you become the employee of that company. Don't think about unskilled employee. You are not unskilled, you are skilled only. Correct? So you become, so can I say we need to pay you salary for your work, and right now your age is 18, and suppose you are liking the company to remain for up to what, 40 50 years now. So after 60 years you retire, then so you'll have grandson, granddaughter also. Correct na? You'll have grandson, granddaughter also. That time smiling. मीन्स आफ्टर 40 years तो क्या होता पता नहीं ना. तो कैन आई से आप में लेट अस एज्यूम 20 year, तो आफ्टर 40 years यू रिटायर, तो दिस इज न्यू कंपनी. तो कैन आई से अचानक से आफ्टर 40 ऑल यू गुड एम्प्लॉय विल रिटायर, रिटायरमेंट इज 60. So suppose we have a 20 employee, so 20 employee I need to pay what, gratuity, so that will be huge amount now. So I need to plan for that expense, plan for that payment right now or not. Now one thing is clear, this 1 lakh I know, 1 lakh one employee, it become 1 lakh into 20 lakh for this year, then 40 years, and then interest cost. Are you able to understand? You use amount. Whenever we need to plan for future, means suppose there is some future payment, suppose there is a future payment, we plan today or not. For example, right now I know I have a 2 sons and both are nalayak. So how you come to know? For a father, son will be always nalayak. Means I was nalayak son of my father. Once I become CA, he understood, acha, he can do anything. Correct. Then now my father also started respecting me. Correct. It will happen. Once you become CA, your father will start respecting you. This course is like that. This course is like that. Means before, believe me, before becoming CA, he don't used to ask me anything, because I was not in business also, in my family business. He don't used to bother also. Who is this Ray? Correct now. Once I become CA, believe me, every day he will call. How much money you are earning? Correct now. So it means you are getting respect now. When you are receiving some calls from your father, he started respecting you. It will happen with you also. 100% it will happen with you. So what I am saying कि I have 2 sons. I know CA तो बड़ा मुश्किल है. They will not be able to become CA. Now what they do I also don't know. So I need to plan for their future or not. And after 24, 25, 26 age, I need to plan for their marriage also. That also I need to plan only. What they will do I don't know. Correct now. So I need to plan for their education, for their whatever business and their marriage. So a lot of payments are required after 20 years, 25 years. So I am planning right now only. So it means I am doing some saving for them. I am doing some saving. Means I am earning, but I need to, from my earning, I need to save for them. Na? That is known as planning. If you are not saving for their future payment, then that is not planning. Correct now. So in this case, just try to understand. You have earned this amount and you have charged this amount to PL. But can I say whether you are doing planning? Till now we have not started planning. Means you have done one journal entry, current service cost, account debit to what? Present value DBO. That amount is payable, that you know. But what planning you are doing? You have not done any planning, because huge amount is payable in future. Therefore, what some entity do, what they will do? They will invest this amount to a separate entity. Same as we have done for what? As we have done for DCP. But there is some difference, DCP and DBP. It means this plan, there is no legal obligation to contribute. In DCP, there was a legal obligation to contribute, because PF ESI, that was under the Act. So there was a legal obligation to contribute, not only employer contribution but also employee contribution, if you remember. But in this, can I say this plan can be funded or unfunded? Means there is no need to contribute. Means entity may decide no need to contribute, no planning required. So then they will not do any contribution to plan asset now. Means it can be funded, it can be unfunded. So right now we are discussing funded or unfunded. Funded. Unfunded means no contribution required, only journal entry required, game is over. Are you able to understand? Now if they started planning their payment, so they will contribute 20 lakh of this year to this separate entity. Correct. Once again, this separate entity is known as plan asset. It is known as what? Plan asset. And this can be state plan, multiple employer plan, same thing, whatever we discussed. And insurance benefit plan, SP means what? SP, state plan, MEP, multiple employer plan. These all are MCQ question. Huh? Write down Ray everything. You don't write only. Everything is not written in the book, na. State plan, multiple employer plan, insurance benefit plan. Written. So this amount is contributed by whom? Entity. But in this plan, employee will not contribute. Employee will not contribute. Understood this point? Now what this plan asset will do? They will invest somewhere and some returns will be generated. Some returns will be generated. Correct? Now my question to you, in this plan asset will pay to whom on retirement of employee? Entity or employee? Means you have understood. You have understood. It means the amount is payable to entity. The amount is payable to entity and entity will pay to whom? Entity will pay to the employee. It means all the risk, there are two types of risk if you remember, investment risk and actuarial risk. What is the meaning of investment risk? The fall in the price of investment. Actuarial means what? Less than expectation. Means you are expecting 20% return but you are getting a return of 11% or 10% or 8% or negative return. That is what? Less than your expectation. That is known as actuarial risk. Both will fall on to whom? Entity. Correct. It means whatever amount contributed, this amount contributed, now you only say whatever this amount contributed, it should be considered as an expense or asset? Asset in the books of entity. But in case of DCP, this amount contributed was considered as expense when they are liable to contribute. Difference you understood? Difference you understood? Means can I conclude the topic remains same but accounting is different now? So can I say in DBP, if that amount is contributed to plan asset, one asset account will be open in the books of entity. That account will be known as plan asset account. Plan asset account. PA account. PA means PA. Plan asset account. Understood? Simple na? If you have understood this much, then I can proceed. Means can I say in this way, whenever this plan is funded, then only plan asset will come. Otherwise plan asset will not come. Whenever this amount is contributed, only plan asset will come. If this amount is not contributed, then no plan asset. Then only DBO. Means in this topic there are 2 points. Whenever we are doing DBP, define benefit plan na? Define benefit plan. So there is one accounting treatment for DBO. DBO means what? And there is one asset, plan asset. This we have understood. In this we have done current service cost, interest cost, actuarial gain or loss. Now we are discussing about what? Plan asset. Normally it has been seen they ask question from plan asset. Normally it has been seen. Correct? Means this AS15 was initially in CA final. Understood? But now CA final this topic is not there. It came to what? CA inter. So when it was in CA final, that time I am saying, that time they used to ask question from plan asset. So now also they will ask from plan asset only. So this is important from exam point of view, that I am saying. Means it is more important than DBO. Define benefit obligation accounting. Can we now proceed? You can see the topic is where? Accounting treatment for plan asset. Now you will give me the journal entry. Think and say. Don't read. Don't read. Now entity will first contribute some amount to plan asset. So for contribution, what will be journal entry? Asset account debit to bank. So we will say plan asset account debit to bank. So plan asset account debit to bank. Correct. So in exam what they will say? Contribution received. contribution received. The contribution received by plan asset, paid by entity. So don't be confused. There is a contribution received by plan asset. So don't be confused now. It is received by, paid by entity. Okay. Now can I say on retirement, suppose the amount payable to employee is 1 lakh. Let us assume. So how much will withdraw from plan asset? And this amount is paid to what? Employee. So there are two journal entries. This is known as benefit paid. Benefit paid to employee. So for benefit paid to the employee under this scheme, under this plan, first we'll withdraw the amount from plan asset, and then we'll pay this amount to employee. So there are two journal entries. So they will say benefit paid, but there are two journal entries. First journal entry is what? Cash or bank account debit to plan asset. Then DBO. DBO is a liability. Already you created one liability, DBO. DBO account debit to bank. DBO is a liability na. For that only you are doing planning. For that only you are doing planning. So for benefit paid out of plan asset, understood? For benefit paid out of plan asset, for amount withdrawn from plan asset, what? Cash or bank to plan asset. For benefit paid to employee, what? Present value of DBO to plan asset. Asset. Present value of DBO to cash or bank. Means can I say in this plan asset will also decrease and your DBO will also decrease. Means your asset will also decrease and your liability will also decrease. Correct. This much you understood. So this point you have understood. This point you have understood. Now what AS 15 says that you first contributed some amount and then you have withdrawn some amount. But can I say this plan asset will generate some income for you? Are you getting? But can I say that income to belong to whom? Entity. Means suppose I have given 1 lakh to you, and if you are investing that amount, that is your income now. But can I say I have given 1 lakh with some expectation that you will generate this much return for me? I have given 1 lakh to you free of cost. I will say give me some return every year now. So my expectation was that you will give me 10%. Understood? So my expectation is what? 10%. But you may earn 20% for me. I will say happy. Or you may earn 2% for me. So 10% become expected rate of return. Expected return. Expected return. Yeah, expected rate of return. And if you are giving me 20%, so how much extra I am receiving? That become actuarial gain for me. Actuarial gain for me. But if you are earning 2%, what is the actuarial loss? 8% become actuarial loss for me. So what AS 15 says that first you should recognize interest income on plan asset by using expected rate of return. By using expected rate of return. Have you understood this point? That expected rate of return will be given in the question. So what journal entry will do? That will become your income. What journal entry? Plan asset account debit to expected return on plan asset. Or you can say interest income. But we'll use this term expected return on plan asset. Expected return on plan asset. This is based on which return? Expected rate of return. This is based on which return? Which rate of return? Expected rate of return. Means in exam question they will give you two rates. One is discount rate. One is expected rate of return. Discount rate is used to calculate interest cost on DBO. And expected rate of return is used to calculate expected return on plan asset. Understood? So don't be confused. For example, suppose this is the fair value of plan asset at the beginning. Expected return on plan asset 5.5%. Defined benefit obligation at the beginning only. At the beginning 2700. Discount rate is 6%. But what will be your interest cost? The interest cost on DBO will be printing machine. This is type of machine. This is 2700 into what? Correct. 2700 into 6%, how much? 162. Correct it, huh? Correct it. So this is interest cost on DBO. And what is your expected return? This will be how much? 2040 into 5.5%. How much? 11220. 112.20. Understood. Means if somebody asks you what is the net charge to PL, the net charge to PL will be difference only. What is the difference? Difference. I said net charge means expense is how much? This minus this 49.80. Understood this point? So with this example, I hope you have understood that expected rate of return will be used to calculate income, interest income, that is expected return on plan asset. Correct? And discount rate will be used to calculate interest cost. This much you need to keep in your mind. Got this point? Yes, sir. Now, let me take one question, then I'll come to some other point. Come to example number 2. X Limited has a plan asset having fair value at year beginning of rupees 1 lakh. Example number 2 given in this AS summary only. During the year, plan asset paid benefit of rupees 10,000 and received contribution of rupees 40,000. Understood? Whenever they say during the year, it means we'll assume mid of the year. Mid of the year. Correct? During the year means mid of the year. Discount rate is 8% per annum. Expected rate of return on plan asset is 10%. Fair value of plan asset at year end is 1,25,000. Calculate actual return on plan asset. Interest income means interest income is what? Expected return on plan asset, and calculate actual gain or loss on plan asset. Have you understood the question? First we'll calculate actual return. We are doing example number 2. Actual return on plan asset. What is the fair value of plan asset at year end? At year end I'm asking. 1,25,000. We'll compare these. Let's write down. Book value of plan asset at year end. What is the fair value of plan asset at year beginning? $1 lakh. Can I say in this we'll add contribution received? Contribution received will be added now. It will increase plan asset by how much? 40,000 minus benefit paid. Benefit paid is how much? 10,000. So what is the book value? 1,30,000. Means can I say there is a negative return? So actual return is negative 5,000. Negative 5,000. No? Actual return negative is loss, but we call it actual return negative. Negative actual return. You can add a loss also, but we call it actual return. Return can be negative, it can be positive. It can be negative, it can be positive. Understood this point? I have written actual. This is not actuarial. Actuarial and actual are different. So don't be confused with the pronunciation. This is actual. Are we coming soon? Actuarial. Correct? Understood? So this is this is the return which is actually earned from this investment. Means you invested 1,30,000, means you are paid 1,30,000, you receive 1,20,000, and then how much is receivable? It means it become negative return na. Now this was point number 1. Come to point number 2. Now they have asked you to calculate expected return on plan asset. Correct. Now the question is that this rate of interest is applied on which basis? Means can you say this rate of interest can be either compounded basis, means whatever interest you are earning, on that also interest will be applied, because you have done investment at the mid of the year, you have done interest, you have done investment on the mid of the year. Correct now. So this 10% per annum, first, so this is not at all important, discount rate is not at all important now, this rate is important, 10% per annum. If question is silent, for this purpose we'll assume it is 10% per annum is compounded on half yearly basis. That assumption will take. ठीक है ना? So assume 10% per annum is compounded on half yearly basis. Now how you will calculate? You have written this now. Assume it is compounded on half yearly basis. Now, so it means, can I say first 1 lakh rate of interest means expected return will be 1 lakh into 10% into 6 by 12, that is 5,000. Yeah. That was first 6 month better right now. First 6 month. Then last 6 month, what happened? 1 lakh was the initial investment. Then how much received? Then how much paid? Then what is the interest? 5,000 will be also added now. What is this amount total? So on 1,35,000 we will calculate interest now. 10% into 6 by 12. Have you understood this? Have you understood this calculation? This is coming how much? 6750. So total become how much? So this become expected return 11,750. Got this point? Now how much you are expecting? But what is your actual? 5,000 negative. So what is the actual loss? What is your actual loss? That's not lie. You are expecting 11,750, but you got minus 5,000. So there is an actual loss how much? 11,750 plus what? 5,000. Yes or no? Just try to understand. This is the number line. You know number line? You are expecting what? Positive 11,750. But you got what? Negative 5,000. This is 0 na? What is the total loss? This is the total loss na? This is your loss. अरे बोलना रे. Suppose you are expecting positive 60 marks, but you got negative 10 marks. You are expecting positive 60, but you got negative 10. So what is the minus? Minus is 70 na. From this to this minus कितना हो गया? 70. We'll do 60 plus 10. This is mathematics, हाँ. अरे बोलना रे. Mathematics तो आना पड़ता है. Correct. Now number line we used to study in class 6. You have done number line? Number line. Done na? Very good. Now done. Calculation of actuarial gain or loss on plan asset. You say what is actual return? That is negative 5,000. From this you'll do less what? Expected return 11,750. The minus minus plus na. So what is your actuarial? Not actual, huh? Actuarial loss. Transfer to PL 16,750. Understood. Understood. So what journal entry you'll do for this bata? Actuarial loss. Your plan asset will decrease or increase? So your journal entries actuarial loss account debit to plan asset. Means suppose they ask you to prepare plan asset account. So what you will do? To balance brought down how much? Then to bank how much? Then buy bank how much? This benefit paid na. Then to expected return. $11,000 and by actuarial loss. By actuarial loss na 16,000. What is the balance figure? 750. Match with closing balance. What was the fair value? It means we are doing proper accounting. Understood. Have you understood this? Simple. Simple now. So let us come to now once again the topic. So we are discussing about plan asset. We have done up to expected return. The next point is actuarial gain or loss. Can I say the difference between expected return and the actual return is an actuarial gain or loss? Have you noticed the para? The difference between expected return and actual return is actuarial gain or loss. So for actuarial gain, what journal entry? Plan asset to actuarial gain transfer to PL. For actuarial loss, what journal entry? Actuarial loss to plan asset. Actual loss will be also debited to PL. Note, actual return on plan asset will be calculated as under the same thing as we calculated fair value plan asset at year end. less carrying amount of plan asset at year end. At year end, how you will calculate fair value of plan asset at year beginning? Add contribution received less benefit paid. This two difference will be what? Actual return on plan asset. Understood? Then how to calculate actually gain or loss on plan asset? Actual return on plan asset less expected return on plan asset. Expected return on plan asset. This will be actual gain or loss. Got this point? Correct? Yes, sir. Can we take one question? Only one question of this nature. I think two questions of this nature has been given. Let us do fast. Question number 10. The following data apply to X Limited defined benefit pension plan for the year ended 31st March 2002. Calculate actual return on plan asset. You will calculate benefit paid, employer contribution means contribution received, fair value of plan asset at the end, fair value of plan asset at the beginning. Calculate actual return. So what do you have to do? Opening, closing is what? 11 lakh. Now I'll find out book value at the end 8 lakh plus 2 lakh 80,000 minus 2 lakh. How much? 8 lakh 80,000. So difference is what? 2 lakh 60,000. This become actual return. Actual return. 5 marks question. Or now it can be in the form of MCQ also. We don't know. Super easy na? Can we proceed? Now, the fair value of plan asset, question 11, of Anupam Limited is 2 lakh in respect of employee benefit pension plan at the beginning of the year. On 30th September 2001, the plan paid out benefit of 25,000 and received inward contribution of 50,000. On 31st March 2002, the fair value of plan asset is 3 lakh. On 1st April 2001, the company made the following estimate based on its market studies and prevailing prices. You can see they have given this is expected rate of return. This is bakwasa. You want expected rate of return? So that is nothing but interest and dividend income, realized gain on plan asset, fund admin cost. You want this rate na 10.25%. So that is given, ignore it. You want the total expected rate of return, that is given how much? 10.25%. If nothing is given, what will assume? We'll always assume this 10.25% is what? This 10.25% is expected rate of return. But from exam point of view, one assumption will prevail. This is the effective rate of interest. Effective rate of interest. I will explain some mathematics, just try to understand. Effective rate of interest. Because I need to do from exam point of view. So just try to understand. Let me first see what solution they have given here. Because I need to teach from solution point of view. Correct only. They have also assumed the same. Just try to understand. As per my previous example, what we have done. So I have said 10% per annum compounded half yearly. This I have given. This in my question I have given 10% per annum compounded half yearly. So you have done calculation on that basis. But suppose let you invested 100 rupees initially. Correct. So 6 months how much you are getting? 10% into 6 by 12, that is 5 rupees. Then for the next 6 months it will be on 105 into 10% into 6 by 12. How much? 5.25. So effectively how much you are earning in that year? So this become 10.25 per annum effectively for the entire year. Understood now? Means can I say if I say this ki 10% compounded half yearly or 10.25% annually effective rate of interest, both are same or different? Both are same only na? Means this and these are same or different? Same. Are you getting? 10.25% you are earning effectively for that particular year. Or I will say the rate of return is 10% per annum compounded half yearly. Are you getting? Means when this is given, so how to calculate this? Means can I say this is nothing but 1, this is nothing but 1 plus r by 100 to the power n. If I will say to the power n are you getting what I am saying? If I say 1 plus 1 plus r by 100 to the power n is equal to 10.25. So can you calculate r? R is coming how much? What do you see? N is what? 2. Yeah. Half yearly means 2 half year. So how much it is coming? Batao now. It will be 2 na. This is under root 10.25. How much it is coming? R is coming how much? Not coming na. R you need to calculate. Calculate R. क्या कर दिया मैंने? हाँ? R by 2 होगा ना? अच्छा. What is the formula? Now it means, can I say in this way, just try to understand. Let me write down one formula. One thing we have understood with this entire discussion, I'll give you the formula, but one thing you have understood is 10.25% is the effective rate of interest. Effective rate of interest means, can I say in this way, कि if principal is equal to 100, then amount is equal to what? 110.25. Can I say in this way? Understood? So from बचपन से we do one formula, if you remember, P1 plus R by 100 to the power n is equal to A. This was the formula. So I have used this formula. I have used this formula. Understood? Have you understood this point? Because it is compounded half yearly, so you used to do 10% divided by 2, that will become R. Correct? So in this you can write down R by 2 if you want to write down. If you want to write down R by 2. Understood? So P is what? 100. 1 plus R by 2, basically write down 100, you can ignore, to the power n is equal to n. Now if you solve, this is what? A is equal to what? 110.25. Now if you solve, so R is coming how much? N is equal to what? 2 times. 2 times is what? Compounded half yearly for 1 year. Means 10% na? In percentage is coming 10%. 0.10, so in percentage form it become what? 10%. We want 10%. Means in the question what was given? 10.25%. But we need to convert it into what? 10% na? 99.99% means 99.99% they will give 10.25%. There is no need to calculate. Memorize 10%. I am saying 99.99% they have created only one question till the history of all the exam, and they are asking this question only. Recently they asked same question in CA final. Recently same question was asked in CA final with same rate of interest. Understood what I am saying? So 10 point, if they say 10.25%, so there is no need to calculate 10% हो गया. Memorize करो. But if suppose they are giving some other rate of interest, then apply this formula and find out what? 10%. Understood? Have you understood? So this is 10% per annum compounded half yearly. This point have you understood? Mathematics. So whenever this type of questions come, I don't know, because in question they have not mentioned anywhere it is 10.25% is effective rate of interest. But in solution they are assuming that. Why they are assuming, I also don't know. Because can I say, as a student will not be able to understand whether it is simple interest or compounded interest or effective rate of interest. But in this type of question, whenever they give this type of question, when they are giving this type of question, always will assume this 10.25% is what? Effective rate of interest, and we need to find out 10% per annum, that is compounded half yearly basis. Understood? Because we need to match ICAI solution. If you will not write ICAI solution, they are not going to give marks. First, have you understood this 10.25%? We have assumed what? It is effective rate of interest on annual basis. It is effective rate of interest on annual basis, and from that we need to calculate what? Rate of interest, which is compounded half yearly basis. Means in my question I have actually given 10%, and in this question they have given what? 10.25%. Both are same only. Correct? Are you getting what I am saying? But can you apply 10.25% in this question? No, you can't apply. So how to do the solution now? Let us understand. First, have you understood this entire calculation? Correct. So we are doing question number 11. Understood. So what they have asked us to calculate? Expected return. So point number A, expected return on plan asset. For the first 6 months, It is how much? Amount opening balance 2 lakh. 2 lakh na? So it is 2 lakh into 10.25% or 10%? 10%, means you have understood. Into what? 6 by 12. This is per annum compounded half yearly. I have already explained how we calculate 10%. I have already explained. Chalega? Yes, sir. This is coming how much? 10,000. Then last 6 months, it will be 2 lakh plus contribution how much? Huh? 55. Benefit paid how much? Then plus what? How much this total is coming? 2,40,000 into 10% into what? 6 by 12. How much? 12,000. What is the total? Have you understood this point? Or can we solve in this way? Can I say in this way? On 2 lakh, because 2 lakh is invested throughout the year, we can directly apply 10.25% because that 2 lakh is invested throughout the year. Na? We can directly apply what 10.25%, how much it is coming? Huh? 20,500. And can I say after 6 months again we invested 55,000 minus what? 25,000. This is invested for how many months? So in that we'll apply 10.25% or 5%? 5%. I will do 10% into 6 by 12. Okay? 5% for the 6 months or 10% for the entire year. So you will do 10.25% or 10%? 10% to 6 by 12, how much? What is the total coming? Answer match now. It means both are correct. Both are correct. But this you can understand only when you are good in mathematics. You all are good in mathematics because I am teaching. But this so easily you can understand. But this answer is given by ICAI. Now if you want to follow this, follow this. If you want to follow above, your choice. Both are correct. But if I will not teach now, when you are reading ICAI solution, you will be confused. Therefore, I have taken entire calculation. In that way, in this way, all. Got this fine? So this question ko to rat lo. 10.25%. 10% as is. Correct na? We can't do anything because they have not given this effective rate of interest. And now we have Paramatma. You will understand such as 10.25% is on per annum basis compounded happily 10%. I mean, they should give proper questions so that we can understand. We are small boy and girl. Understood? Correct. Chalo. But I hope you have understood this. Now they have asked actual return. Actual return, so you can calculate. Point number B. Actual return. What is the fair value of plan asset at year end? will compare with what? Carrying amount or book value of plan asset at year end. First, can you give me opening balance? 2 lakh. Then plus contribution 55,000 minus benefit paid how much? 25,000. This amount is coming how much? 2 lakh 30,000. 2 lakh 30,000. So what is the actual return? Now they have not asked, but can you give me actuarial gain? In this actuarial gain na? Actual gain on plan asset is expected how much? 22. So 70 minus is equal to 48,000. Understood? This become actuarial gain. Normally they ask this type of question for 5 marks. Only they will change the number. Write on MRQ. Must revise question. Done? Chalo. So this also we have understood. So can I say we have understood the plan asset also? So last day we have done defined benefit obligation. Today we have done plan asset. Now there is one more concept of past service cost. In this we are doing defined benefit plan. Defined benefit plan not yet over. Now past service cost means what? What they want to say? Suppose the company was started in 2005 and right now it is 2020. And in this year you started one gratuity plan. You introduced one plan. So this plan will be applicable to all employees. And this plan will be applicable to all employees from the beginning. Now they have already served 15 years of services. So can I say for 15 years of services you need to recognize some expense on this date or not? Because you have introduced this plan today only, but it is applicable from the beginning. So can I say because of that reason, because you have introduced some plan, there may be some past service cost. There may be some past service cost for the employee who are working from the beginning. Means this year so it is current service cost. But can I say at the beginning of the year you need to recognize one past service cost or not? So that is known as past service cost due to introduction of a plan. Understood? Or there can be some modification in plan. Suppose from the beginning you are applying one plan that 40% of last drawn salary will be given. So based on that you have already recognized, you have already calculated DBO. The plan is modified. Now from 40%, now management is saying not 40% will provide you 60%. So the plan is modified from 40% to 60%. So initially till this year you have created your expense based on what? 40%, but now it is payable based on what? 60%. So your present value of DBO will increase or not? So that is known as what? Past service cost. Or there may be some curtailment. Curtailment means for reduction in number of employees. Reduction in number of employees. Suppose you close down one business, not entire entity. Close down one factory. So the factory is going to what? Close down. So that employee will be retrenched. So automatically the number of employee will reduce. The number of employee will reduce. So your defined benefit obligation will reduce. Correct. It means you need to reduce your present value of DVO. So that is known as what? Negative past service cost. Means you need to decrease, and whatever decrease is known as negative past service cost. So what they want to say? What they want to say? The past service cost is the change in the present value of DVO. Understood? Past service cost is the change in the present value of DVO. Present value of liability. For employee services in prior period. For employee services in prior period. Resulting in current period from the introduction of plan or changes to post-employment benefit plan. Either introduction of post-employment benefit plan or modification in what? Post-employment benefit plan. Past service cost may be either positive when benefits are introduced or improved, or negative when the existing benefits are reduced. When the existing benefits are reduced. So it can be either positive, positive means expense, it can be negative, negative means income, but we'll call it negative past service cost. If your present value DBO will decrease, it means negative past service cost. If it increases, means positive past service cost. Understood? This much you understood? Correct. Now what they want to say, accounting treatment is थोड़ा सा interesting. This is very important for MCQ. Very important. What they want to say is, suppose a plan was introduced on this date, correct, and 2 years has been expired. This is our current year. This is our current year. Correct. And the plan was that minimum period of service requirement is 5 years. Means an employee need to work for how many years? 5 years. Then only they are eligible for the plan. Otherwise they are not eligible for the plan. Means can I say this is 3rd year, 4th year and 5th year. So on this date we call it plan become vested. Plan become vested. Means right now the plan is unvested. Right now the plan is unvested. I hope you have understood. Unvested. Are you able to understand? What is vested, what is unvested? When an employee completes 5 years of service, so that become vested, means they are eligible for what? Gratuity, etc. When they have not completed 5 years of services, even though we are recognizing some expense, but they are not eligible for gratuity, etc. Got this point? Correct. Understood? Have you understood? First you have understood this much. Now suppose in the year 2002, now this much you understood? Now this is a date when the plan got amended. Amended. So we need to calculate past service cost. Suppose past service cost calculated is 200 lakh. 200 lakh. So right now the plan is vested or unvested? Unvested, correct? And it will be vested after how many years? 3 years. So we call it remaining vesting period. What is the remaining vesting period? The remaining vesting period is 3 years. So what AS 15 says that if plan is unvested, this 200 lakh will be recognized as an expense on SLM basis over the 3 remaining vesting period. Means remaining vesting period. Understood? So this past service cost will be recognized as an expense over the remaining vesting period. Over the remaining vesting period. But if the plan is vested, then it will be recognized as an expense immediately. It will recognize as an expense immediately. Understood? Very, very important for MCQ. So can we conclude in this way? Past service cost, if plan is already vested, recognized as an expense immediately. Understood? But if plan is unvested, so it will be deferred and recognized as an expense over the remaining vesting period on SLM basis. Correct. It means, can I say, for vested plan, what journal entry will do? We'll say past service cost account debit to present value of DBO. For unvested, what journal entry? We'll say unamortized past service cost, which will be amortized in remaining vesting period. We will first create one account, unamortized past service cost account. To what? Present value of DBO. Journal entry have understood. This will be transferred to PL immediately. This will be transferred over remaining vesting period. Remaining vesting period. Understood? The journal entry. Have you understood this? Only you need to remember these journal entries. Means that accounting treatment. So what they want to say? I think the first point number A and point number B you understood. The past service cost is the changes in present value of DBO due to introduction of a plan or modification in plan. It can be either positive or negative. The past service cost should be recognized as an expense on a SLM basis over the average period until the benefit become vested. Means it is for unvested or vested plan? Unvested. Unvested plan. So we'll call it unrecognized or unamortized, whatever. Unamortized, you can write on unamortized past service cost account debit to present value of DBO. Better one is unamortized, which will be amortized during remaining vesting period. Correct? Sometime in exam they will say unrecognized. But can you say if unrecognized, then why you are passing journal entry? Okay, na? So better word is unamortized. Correct. To the extent that benefit are already vested, an enterprise should recognize past service cost immediately. Then what journal entry? Past service cost to present value of DBO. Understood? There is no question of this nature. One theoretical question is there which you can answer by your own if you have understood. But I need to find out where is that question. Yeah, 14. ABC Limited operate a defined benefit plan which provide to the employee covered under the plan a pension benefit which is equal to 0.75 final salary for each of completed services. An employee need to complete minimum of 5 years service for becoming eligible to the benefit. On 1st April 2015, the entity improved the pension plan benefit to 1%. So from 0.75 it become 1% of final salary for each year of service, including prior year. The present value of DBO is therefore increased by 80 million. So this become what? This is past service cost. Increased by 80 million due to that amendment, due to that modification. So that become past service cost. Past service cost is changes in present value of DBO due to amendment modification. So it is increased by 80 million. So that become past service cost. Given below is the composition of this amount. Employee with more than 5 years of service at 1st April 2015, 60 million. So employee with more than 5 years, but the vested, unvested. So this much should be charged to PL immediately. But employee with less than 5 years of service, correct, is 20 million. The employee in the second category have completed average 2.5 year of service means on an average they have completed how much? So how much remaining? 2.5. It means this should be amortized in how many year? 2.5 year. 2.5 year. Comment on the treatment of 80 million of DBO in the financial statement as per AS 15. So as per AS 15, past service cost 60 million need to be recognized immediately as those benefits are already vested. The remaining 20 million cost is recognized on SRM basis over the vesting period, that is period of 2.5 years commencing from 1st April 2015. So this type of question is important for MCQs. Now this type of question can be asked in MCQ. Simple. Correct. Now the last point of this concept is about defined benefit plan is curtailment and settlement. Curtailment means for already I have said that when the number of employees is reduced. Now curtailment can be of two types. Curtailment with settlement, curtailment without settlement. Means number of employees reduced but nothing to pay to the employee for this retirement benefit. Quite possible. But curtailment, number of employees reduced but we need to pay some compensation for this retirement benefit. Correct? Understood what I am saying? So if I am saying curtailment and settlement, so just try to understand. What will be journal entry for curtailment with settlement? And without settlement. Can I say whenever there is a without settlement, so your liability will decrease. You will say present value of DBO account debit, present value of DBO account debit. Correct. And can I say for this there may be some unamortized past service cost also, which need to be also now reduced. Means if there is some unamortized past service cost, if you have remove your liability, you should remove that also. So you will do what? 2 unamortized past service cost. Any amount is paid, nothing is paid. The difference is known as curtailment gain or loss. It will be always gain only because nothing has been paid. Curtailment gain, which will be transferred to peer. Understood? Correct. If I am saying with settlement, then what journal entry? Present value of DBO 2 unamortized past service cost, if any, unamortized past service cost, if any, it will not be always. Correct. If any, so will remove that also. To bank, the difference is known as settlement gain or loss. Settlement gain or loss. Understood? If you are paying more, it is a loss. If I am paying less, it is a gain. Got this point? Super easy. So what they have given? A curtailment may arise from an isolated event such as the closing of plant, discontinuation of an operation, terminating or suspension of a plant. As settlement occur when the enterprise enter into a transaction that eliminate all future obligations for the part or all of the benefit provided under defined benefit plan. An enterprise should recognize gain or loss on curtailment or settlement of a defined benefit plan when the curtailment or settlement occur. Understood? Journal entry already I have said. The gain or loss on curtailment or settlement should comprise any resulting change in present value of DBO, any resulting change in fair value of plan asset, any related past service cost that had not been previously recognized. Understood this point? Means what journal entry present value of DBO to unrecognized past service cost to cash or bank if any difference will be curtailment gain or settlement gain loss. Means in book I have given only one journal entry. But here I have explained with curtailment. Curtailment without settlement this journal entry. Curtailment with settlement this journal entry. Understood? Only one question has been given to this regard. Let us read that question. Question 7. Rockstar Limited discontinue a business segment. So when you read, you will think it is a question of segment reporting. Under the agreement with employee, now AS15 will come. The employee of discontinued segment, now you will go to AS24. Understood? This type of question are dangerous. Till you read entire question. So normally what happens, the student in exam hall now is not able to understand which question need to attempt. So they start reading, they will go, Arey Baba. But this is super easy question. You can't decide whether the question is complicated or easy with 2 or 3 lines. Read entire question. Otherwise, don't leave initially only. Why you wasting your time? Correct now. So first let us read. Discontinued segment will earn no further benefit. This is a curtailment without settlement. Understood? Feeling आया? This is a curtailment without settlement. Because employee will continue to receive benefit for the service rendered before discontinuation of business segment. Curtailment reduces the gross obligation for various reasons including change in the actuarial assumption made before curtailment. This is all a bakwas point. If the benefit are determined based on last pay drawn by employee, the gross obligation reduces after the curtailment because the last pay earlier assumed is no longer valid. This is all bakwas. Rockstar Limited estimated share of unamortized service cost that relate to the part of obligation is 18, 10% of 180. Calculate a gain from curtailment and liability after curtailment to be recognized in the balance sheet of Rockstar Limited on the basis of given information. Immediately before the curtailment, the gross obligation is DBO is 6,000 based on the current actuarial assumption. The fair value of plan asset on the date is estimated at rupees 5,100. Then unamortized service cost is 180. Curtailment reduces the obligation by 600, which is 10% of gross obligation. So you can see we can calculate this is 10% only. So can you see if this will reduce by 10%, so this is also reduced by 10%. Understood? Understood? Correct. So what will be journal entry first? Give me. We are doing question number 7. What is journal entry? Batao. Present value of DBO will be how much? Account debit how much? 10% of 6,000. 600. To unamortized past service cost 10% of 180. 18. Difference will be 2. Curtailment gain transfer to PL how much? 5. 82. Correct. Now they will ask you to prepare extract of balance sheet. They will ask you to prepare extract of balance sheet. This I have not yet informed you. So with this question I am trying to inform you. Extract of balance sheet. So what AS15 says that you need to disclose present value of DBO in liability side. How much present value of DBO now? 6,000 minus 600. That is how much? 5400. Are you able to understand what I am saying? Correct. Now, from this, we deduct fair value of plan asset. Means in balance sheet, we write down net amount. Means plan asset will not be shown in the asset side of the balance sheet. Plan asset will reduce from the DBO and the net amount will be shown in the liability side of balance sheet. What is the plan asset given? How much? 5100. So this become 300, and from this we'll also deduct unamortized past service cost. That is 180 minus 18. How much? 162. So this become net DBO. DBO means defined benefit obligation. How much? 138. Understood this point? So this will be shown in the balance sheet under the head under long term provision. Under long term provision in the balance sheet. Got this point? 5 marks question. Or they may create one MCQ. They will ask how much amount will come in the balance sheet. So 138 is the amount which will appear in balance sheet. Simple. Simple na? We can see in answer also they have given same only. They have calculated in statement format reduction in gross obligation, proportion of unamortized past service cost. This is the gain from curtailment. Then they have given liability to be recognized in balance sheet 138. Understood? Chalega? Yes, sir. Correct. Now, presentation of DBO and plan asset in balance sheet. Right now I have discussed that only. The present value of DBO less unamortized past service cost less fair value of plan asset. This become net defined benefit liability. Got this point? Now one doubt will come, sir. This can be negative also, na? Means it is quite possible the amount of DBO is 1000 and fair value of plan asset is 1200. Then it can be negative. So whether the net amount will be shown in the asset side of the balance sheet? Yes, it will be shown in the asset side of balance sheet then. Understood? But there is some restriction on that amount. Correct. This too you have understood. This will come in the liability side of the balance sheet. So what they say? The amount determined above may be negative an asset. Amount determined may be negative an asset. So if it is negative, then in asset side, but how much amount that we need to understand. So enterprise should measure the resulting asset at a lower of A and B. At a lower of A and B. Means the asset will not be this amount. Asset will be A or B, whichever is lower. Important for MCQ. No question of this nature has been given, but can be asked in the form of MCQs. Are you able to understand what I am teaching? Means normally it will be liability only. Means can I say the DBO will be more than plan asset, but sometimes plan asset can be more than DBO. So if plan asset is more than DBO, then it becomes surplus. There is some surplus amount, so surplus becomes negative. Negative means what? Asset. But how much amount will be shown in the balance sheet that we are discussing? So what they are saying? The entity should measure the resulting asset at lower of A and B. The amount determined above means this, or the present value. You know present value of any economic benefit available in the form of refund from plan or reduction in future contribution to the plan. Just try to understand. Means there will be no practical question on this. There will be theory question or MCQ question only, but you can retain only you have understood. Suppose I am the entity and you are plan asset. You are a separate entity. So we have done some contract. So normally I will contribute every year and you will invest somewhere else. Now there may be one contractual agreement that if there is a surplus in plan asset, so surplus will be refunded after 20 years. If I say surplus, if there is a surplus, so we have done one contract that surplus will be refunded after 20 years. So after 20 years, now means the surplus, that amount will be available after 20 years. So that is future value or present value? Future value means present value will be the amount of asset right now is the present value of future amount. So you need to calculate the present value of refund now. That become asset on this date. Understood? One second, let me explain. Here we write now, today is 31st March 2023 and there is a DBO is 1000 crore and there is a plan asset which is 1200 crore. It means surplus how much? 200. But this 200 is payable after 20 years. Means we'll get 200 but after 20 years. So this 200 become what? Future value. So we need to find out present value of refund now. So that present value is that today's asset. Understood? So I hope you have understood now. So what they want to say, it will be A or B, whichever is lower. A is 200 and B is present value of 200, to which will be lower? Present value will be lower. Understood? So the present value of any economic benefit available in the form of refund from plan or reduction in the future contribution, or there may be some reduction in future contribution. Suppose we are contributing 1 lakh, 1 lakh, 1 lakh every year. Now that they said you are not supposed to now contribute 1 lakh, contribute 80,000 every year. So we get a benefit of 20,000. So we can find out present value of that benefit. That become the amount of asset. So only to remember this much, A or B, whichever is lower. Only for theory question. So A is what? Surplus as calculated above. B is what? Present value of economic benefit available in the form of refund of from plan or reduction in the future contribution to plan. Understood? The present value of these economic benefits should be determined using the same discount rate whatever we have used for DBO. In statement of PL, बताओ, balance sheet you have understood. In statement of PL whatever will come? Current service cost, interest cost, the expected return on any plan asset, expected return, correct. Actual gain or loss, net amount. Net means what? There are two actual gain or loss. One is actual gain or loss on DBO. There is one actual gain or loss on plan asset. So net amount will be charged to PL. Actual gain or loss on DBO plus minus actual gain or loss on plan asset. Past service cost, effect of any curtailment or settlement. This all will be transferred to what? PL. Important for MCQs. So what will come in PL? Current service cost, interest cost, actual gain or loss, net amount. Net you understood? Then curtailment gain or loss, settlement gain or loss, then past service cost. One छूट गया, expected return on plan asset. Understood? Done. This much you understood. Now balance topic is 5-minute game. So you can see from question point of view the chapter is very small. So read the content, do only the question whatever is given in ICAI study material, they will ask that question only. Because May 24 is the first attempt, they will not create any new question. I also know, you should also know that. Correct. And they will create a new question, so they will give in RTP before your exam. So if that is a new question, I will only update you, don't worry. Correct. But I know in this chapter they will not play much. They want to play, so they will play in some other years. Okay. Chalo. 2 point also will take, then we'll close. Long-term employment benefit. Okay, long-term employment benefit is any benefit which is payable after 12 months from the reporting date but before retirement. It is not post-employment benefit plan. So any other long-term benefit include the following items which are not expected to be settled within 12 months after the end of reporting period in which employer render the related services. This will include long-term paid absences, means any absence which can be carried forward after 1 year. That is also what? Long term, but that is also compensated absence but long term. Correct. Jubilee or other long term service benefits. Suppose you completed 25 years of service, so they will pay you some amount. Long term disability benefit. So for a disability person, they pay some amount which are of long term nature. Profit sharing bonus, deferred remuneration. Correct now. Only just memorize this, not so much important. Recognition and measurement is similar to defined benefit plan. Means whatever we have done for defined benefit plan will be applicable for this. Means current service cost, interest cost, present value of DBO, everything. Only one exception is there. In this case, entire past service cost, if any, will be charged to PL as an expense immediately, whether vested or unvested. In that case, vested, unvested, different. Here, vested or unvested will be charged to PL as an expense immediately. So, all past service cost is recognized immediately, whether benefit are already vested or unvested. This is the only difference. This you need to keep in your mind, which may be asked in terms of MCQs. Termination benefit. Termination benefit means which is due to termination, is due to entity decision to terminate an employee or employee decision to opt for voluntary retirement. You know about voluntary retirement? The employee will take voluntary retirement. I want to retire. I want to go to Goa forever. I want to retire. So they will take voluntary retirement. In that case also entity will pay some compensation. Actually, what entity want that old employees should go and new employees should come with fresh mind, fresh energy. Because old employees normally entity, private company normally, not government company. Government company will say remain. Correct. But private company, what they want ki normally after the age of 55 brain stop working. But we can't force them to retire. No one has a right to force them to retire. So they will introduce one scheme of voluntary retirement. If you retire, then only new person will come now. So they will announce one scheme of voluntary retirement. In that scheme, they may opt that and they may get retirement with some benefit payment. That is known as termination benefit. Means can I say entity should recognize the termination benefit as a liability and expense only when these three conditions are satisfied. It is nothing but same to same whatever we have done for provision. First, entity has a present obligation as a result of past event. It is probable that outflow of resource will be required to settle the obligation and amount can be estimated. So if these three conditions satisfied, they will recognize termination benefit as a liability and expense. Correct. Only we need to understand how to recognize termination benefit in simple, but I will say that termination benefit is payable within 12 months at undiscounted amount. After 12 months at discounted amount. Can be important for theory question. Or can I say if they ask a practical question also, कि this is the termination benefit payable after 2 years. Discount rate is 10%. Can't you calculate? You can calculate. They have not given any question, but we can calculate if you know this concept. So if the termination benefit are expected to be settled wholly before 12 months at an undiscounted basis, correct, are not expected to be settled before 12 months than an discounted basis. Chapter close. Any question which we have not done, check karo na. From bottom. So this question we have done, this question come out 30. An entity discontinue a business segment, I think similar question we have done. An employee of discontinued segment will earn no further benefit. This is a cut. This similar question we have done. Huh? Similar question we have done, you can do it by your own. That curtailment wala question, okay? Do it by your own. Question number 12. A defined benefit plan has the following characteristics: present value of obligation 1100, fair value of plan asset 1190, 90 negative, unrecognized past service cost 70, negative amount determined 160. Present value of available future refund and reduction in future is 90. Means surplus is coming how much? And the present value is coming how much? But the asset will be shown at what amount? 90. Correct. You can see. Since in the given case 90 is less than 160, therefore entity recognize an asset of 90 and disclose that limit is reduced to the carrying amount of asset by 70. Understood? So you reduce your asset by 70 and 70 will be transferred to PL. 70 will be recognized as a loss in PL. This type of question can be asked in MCQ format. What is the amount of asset to be shown in the financial statement? 1 mark question. Simple na? 11 we have done, 10 we have done. 9 is a theory question, just read, but it is very important from exam point of view. Once let us read only. A company has a scheme for payment of settlement allowance to retiring employee. Under the scheme, the retiring employee are entitled to a reimbursement of certain travel expense per class they are entitled to as per the company rule, and to a lump sum payment to cover the expenses on food and stay during the travel. Alternatively, employee can claim a lump sum amount equal to 1 month pay last drawn. There are two options. The company's contention is in this matter are: settlement allowance does not depend upon the length of the service of employee. It is restricted to employee eligibility under the travel rule of the company or where the option of lump sum payment is exercised equal to last pay drawn. Since it is not related to length of the service employee, it is accounted on claim basis. State whether the contention of company are correct as per the relevant accounting standard. Give reason. Can I say anything payable after retirement benefit that become post-employment benefit? So this amount is payable after retirement, is become post-employment benefit, and can I say in that case this is not DCP, this is defined benefit plan. There is one plan that they will get a reimbursement of travel expenses. This will come under what? Defined benefit plan only. So what they are saying, let us see. The present case fall under category of defined benefit scheme as per AS 50. The said para encompasses where the payment promised to be made to an employee at or near retirement presents significant difficulty in determination of periodic charge to the recipient. The contents of a company that settlement allowance will be accounted for on claim basis is not correct. Even if the company's obligation, the scheme is uncertain and require estimation. In estimating the obligation, assumption may be need to made regarding future condition event which are largely outside the company control. Thus, settlement allowance, can I say, simple. You read it, but this is very important. Already asked in CA final exam 2-3 times. Correct now. So can be asked in CA inter exam because they have asked there, they will ask here also. 8 we have done, 7 we have done. 6 similar question we have done. 10.25%. I said now this is common. 10.25%, 10%. That's all. This all balance question, just read. Come to MCQ. Gratuity and pension would be example of short-term, long-term, post, none, post. Non-accumulating compensating absence is commonly referred to as what? Earned leave, sick leave, casual leave, all of the above. All of the above. What the answer is given? Non-accumulating compensating absence. चल रट लो बकवास क्वेश्चन. Casual leave, because देखो these are the based on management policy. You can't say always. Casual leave can be also carry forward, or it can be what, not carry forward, depending upon management policy. But इसको रट लो कि casual ऐसे करो. Casual leave will be always what, non-accumulating, and these two will be what, accumulating. Correct. Now, some you need to do smart work. Non, and these two are accurate. Perfect. The plans that are established by legislation to cover all the entity and are operated by government include multiple state insurance, which is operated by government. State plan, I say state plan is created by government. So state plan is the answer. What is the answer? 3B. This is correct. चलो बच गया. 3B. Correct. Best estimate of variable to determine the eventual cost of post actuarial assumption. In this chapter the actuary only na 4 का भी. Actuarial gain or loss should be recognized to reserve, charge over the expected life of employee, charge immediately to PL, charge immediately to PL. Understood. Chapter over. Okay. Okay. So today we are not starting any new accounting standard. From your syllabus point of view, 3 accounting standard left and 1 chapter is left. Branch chapter and 3 accounting standard are left. Okay. 3 AS 18, AS 27, AS 23. Apart from that, and one chapter is also framework chapter is there and one introduction chapter is there. That is a game of half an hour. That will not take much time. So 3 main accounting standard, 1 branch chapter. Okay. With this much only. Thank you very much. We'll meet next day. Till then, bye bye. Take care. Enjoy your remaining day.